Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, guys and gals. So let's take a look again on the euro currency. So changes are coming really fast, and I would say too fast actually. So it seems that our suggestion that the major evidence should come somewhere in the end of the March was too optimistic, as they already are here. And recent action that you see on the market mostly was triggered by the strong impact on by the Fed representative on the former sentiment that a lot of traders are still following to. So if you remember, the previous sentiment is long-term zero interest rates, anemic tempo of economy in the United States, long-lasting support from the Fed Reserve, and the stimulus package from the government, and so on. No smell of the inflation around. And recently, the John Bullard, representative of the Chicago Bank and the Federal Reserve System, has crushed this sentiment. He said that inflation probably will heat up even in this year. And that just collapsed all markets across the board. You could see what's going on the gold, you could see on the euro is a less degree, and also you could see what's going on actually on the interest rates. So that was has happened. Yes, that was in the morning when we prepared our video, and that what has happened with the session. From the 1.2 to the 1.3, it's just 13% rally just in one session. It's outstanding performance. So on this, well, guys, let's take a look at it. It's interest rates starting from the new year. It's rising more than 50% in a couple of months. So that's just it shows what's really going on currently. And reaction on the market, strong downside reaction, means that not everybody have anticipated this stuff. So that's actually what has happened. So it means that overall evidence of the situation come probably faster within a couple of weeks, I suppose, somewhere to the March Fed meeting. Probably should be some clarified, especially if Jerome Powell will tell something concerning the rising of the interest rates, or even if he will not tell and do something, well, in this case, it also could make impact. So in a short-term perspective, the recent information that we've got yesterday put under question of the possible immediate upward action. Theoretically, it's still possible, so the hand and shoulders that we're considering is forming. And market is coming to a decisive moment, so it's the bottom of the right arm, so it has to turn up from here, or it will be just collapsed at the downside. And this pattern will be erased, and be prepared to the drop somewhere below the 1.1875, even lower. So it will be significant downward continuation. Here we have reversal candle on the daily chart. It suggests a possible downward action more, but trend still holds bullish. So today we will keep a close eye on what will happen with this pattern. What I do not like with this pattern, so take a look at the 4 time frame chart. I do not like the pace of the dropping. So here is actually, as we know, the hand and shoulders pattern, bulls should control the market. This is final part of the pattern. So here should be gradual downward action and fast upward action. But we do not see it. It's obvious. It's on the recent background. It's more stimulus for activity for bears and buyers of the United States dollar. As the return on the United States dollar assets is rising, subtract the bargain hunters. Also, it gives the hint that probably Fed will start interest rate rising cycle faster than all other economies. It also makes investors to prepare in advance to this moment and trying to buy the assets that currently are cheap to prepare for next step by the Fed Reserve. That open demand for United States dollar. So currently, of course, by the just one single statement from John Buller, hardly it will be just drastic, immediate reaction and final reversal in the market. But this is the first bell. Maybe its market will come down a bit later, shows the backward actions and return back, and the roll will be smoother. Smoother the reaction on the current activity, but it already means something here. Anyway, currently, as you can see, we are watching for a 120.60 area. This will be at the bottom of the right arm. The market has to stay above it. If this will not happen, be prepared to raising of this patch and drop below 119.50 area. It's at least. Well, I suggest that probably will be deeper action below the 119. So that's what we need to keep an eye on today. Also, guys, with this recent activity, we have to adjust the neckline. It's making the different slope here. For the pattern, it's definitely this was the suggested detaching of the neckline. On the hourly chart, you could see more drastic performance with the failure breakout out of this consolidation, and that's another thing that I do not like. In fact, this is, guys, the fake breakout of the consolidation. Market ignores the XOP, hasn't reached it, and collapse, return back down inside of the range. Usually, with this type of action, market breaks this range down, and what you already see, and making the calculation of the range, counting to the downside, you could see that next stop probably will be some of the market will be around 20.30, 618 support. But that is already will be, well, really thin ice of the bullish context, because this last point where market has to stay to keep chance on upward action. So currently, guys, we are watching for this one. This conference where market stands right now, theoretically, it could support the market and could return it back in the consolidation. That will be a positive moment. In this case, market could stabilize somewhere in this range. This theoretically is possible. But when taking into consideration the speed of this downward action, I would suggest that hardly this level will hold the market. Probably it will be broken because mostly it's already has been passed. So market already actually trading is below the conference. So that's what we need to keep an eye on today. So currently, if you would like to buy, do nothing. Wait for deeper action to the 2030, 35 approximately, and see what will happen here. If it will be the same type of action as here, do not take any long position, because in this case, chance on the failure of the hand shoulders that we're considering will increase. Also, do not forget what we have on the weekly chart. Recall what we discussed in the weekly report. We have the bearish divergence, large bearish divergence, which suggests that theoretically on the daily chart we could get a different pattern. It's really big, having shoulders right here. This could happen if situation will start to change rapidly. It's already we see recently. So that's why do not be too optimistic on the attempt to buy around 2035. Be careful in the current situation. And chances that market will break this area to the downside are significant.